Dan Gjeldum of Guaranteed Rate is here with us. He's been at this for almost 3 decades, and he's been taking amazing care of Chicago home partner clients for so long. I am ecstatic to have you here with us today.
Thank you. I'm ecstatic to be here too. Your podcasts are fantastic, and I'm lucky to be a part of it.
I think most people understand the normal concepts of getting loans, but what they don't understand is that there are so many programs out there. There's so many tricks and tools that you use to really put your clients in the best position possible. Talk to me a little bit about this. Our
industry, the mortgage industry, it's constantly evolving, right? There's more programs being added seemingly every day. We get some sort of email about a new investor with a new program. So it's my job, and it's every mortgage person's job, to be educated on what's coming out. So as you know, we recently had some first-time homebuyer programs that launched, and they're amazing, right? There's Freddie Mac, for instance. They have a program where buyers get up to $3,000 of free money, $1,500 from Freddie Mac and $1,500 for Guaranteed Rate, if they live in certain metropolitan areas. Chicago is being one of them, and then it's Atlanta, some in Texas, Philadelphia, for example, all around the country. And we only work on qualifying income. So if your base salary fits under 100, this is getting kind of detailed, but it fits under 140% of the median income for the metropolitan statistical area, the MSA, you get $3,000 if you're a first-time home buyer. We had a client in Philadelphia whose base income was $500 less than the limit. $500. Okay. He just fit it in, right? $42 a month. He fit under the limit, and he got $3,000 of free money.
Oh, that's
so
fantastic.
It's programs like that are out there. Here in Chicago, and well as some other areas, this is kind of bigger. Fannie Mae has a program where if you're buying a property in their targeted areas, and I'd love to define what the targeted areas are, but we run it through a little system on our computer, and it tells us yes or no.
We call that fuzzy math.
Exactly. Or where you're moving from. Mm-hmm. So it could be where you're moving from to buy your first house. You get $5,000 from Freddie Mac and $1,000 or 1% of your loan amount from Guaranteed Rate up to $3,000.
Wow.
Those are kind of run through our systems. And we got an email recently for a girl who's buying her first place. Her parents are co-signing. There's no income limit on that program. And she got $8,000 of free money.
Wow.
Towards closing costs. So those things are out there. Not all lenders have access to it.
Sure.
So the bigger the lender, the better off you're going to be for those kinds of things.
Yeah. And as you just said, in certain of those, I know Guaranteed Rate is actually matching some of it as well to give them a kind of a double down on a really benefit. For me, the big shocker for me to learn in a lot of those was 2 things. Number one, first and foremost, the income levels on the ones that do have qualifications were much higher than I even thought, right? Yeah. I mean, we're not talking low income by any means. These are big numbers out there, especially in a metropolitan area.
Yeah, Chicago's $153,160.
That's a big salary. So for certain, that's a great thing to know in terms of that. The other thing, and it'll become less of an issue, I think, as we get more into this year, but a lot of those programs have interest rates that are lower than what the national norms are. So we had people that were locking in some of these things that were actually getting interest rates that were 0.5% lower than some of the other things that we saw.
100%. It's crazy, right? Because one client in particular, we had that there was 0.75 of a point for them because those programs eliminate negative credit score adjustments. They eliminate property type adjustments, right? So condos are more expensive than single families if you don't put down 25%. So somebody with a credit score that's 1 point lower than the best and buying a condo, they don't get as good of a rate, right? But in these programs, it's completely eliminated.
Right.
And it's 0.5 point to 0.75 of a point in some instances better than if you didn't fit into that.
I just want to hammer in on that point because I think you made an excellent point in there that's really important for us to note. Condo purchases, unless you hit a 25% down payment, have a slight uptick on that interest rate. And so that's important to note. When you're seeing the advertised interest rates, those interest rates 99.9% of the time are going to be for a single family home. So if you have that, you see that, and then you have a conversation with Dan and he tells you those rates are a little bit different, that is very normal in terms of what we expect to see. And because we sell so many condos, I think that's a really important note.
And that's something when you see rates in the press, those are always a completely vanilla 20% down, perfect credit, right? If you are vary from that at all, the national average rate, that they don't even tell you what those costs anymore. They used to have points in them. Those average rates are great. You get a directional feel from it, but the chances of you being at that rate are really slim.
Okay, let's transition into what I call the tricks and the tools. This market that we've been navigating for now the last 3+ years has been a wild ride. I mean, they all are in some sense, but we've really had to lean in hard on our lending partners to put us in the best position possible to represent our clients, whether it's been competitive, whether we've had clients that need to sell, but it's hard to get that accomplished in our market. Talk to me a little bit about some of the tools that you've been working with your clients and my clients to be successful.
Whenever people are presenting an offer to a seller, right? Your job is to make it as attractive as possible. My job is to make the borrowers as attractive as possible as well. That means we can do full credit approvals subject to like where we do a full underwrite on people, subject only to the appraisal and to title, right? So that allows us to move extremely quickly, right? And we can do that as long as early as 90 days ahead of time, right? So we can get somebody fully credit approved. We had a deal in Tennessee. That's why they got it approved, because it was fully done, right? All it needs, appraisal and title, and we're done. So having things like that out there, that's big to know. And it puts our buyers in the best position possible from a seller perspective, as well as you know, if they don't choose to do that on the pre-approval side, property specific pre-approval letters, right? Yep. That aren't, so we're not revealing the cards of someone with, because more often than not, people can afford way more than they actually want to spend on a property. Nobody needs to know what somebody can absolutely spend on a property, yep. Right? They need to know you can buy their home that they're selling.
For certain. No, we've been using so many of the great tools that Guaranteed Rate has come up with, because the reality is it is so competitive in certain aspects of our market that we've really had to lean in hard on our partners to present our clients in the best light possible. And I know you've been doing an amazing job of getting us there. Now, the other thing that's really important to know, and why it's so great to have what I call a lending consultant, right? Most people just call you a lender. I call you a lending consultant, is because we can sit down and we can strategiz on what tools are going to put you in the best position possible. It's not going to be every tool that works in every season, right? We have things that we were using in Q3 and Q4 that are never going to fly in this quarter here. And that's where it's really important to align yourself with somebody that gets it, that understands it, and is going to give you the best at bat you possibly can get.
Yeah, absolutely.
Well, Dan, I cannot thank you enough for being here. I know you made the long commute into the city. Not really that long, just kidding. It's been a pleasure. As you know, you are such a backbone of what I do. You give me so much confidence and knowledge. I was just so thrilled to be able to share you a little bit with the world.
Oh, thank you so much. It was great being here.